I'm going to chat a little bit about financial statements. So in week 3, we introduce financial statements. Up to this point, we've been talking about some basic concepts about accounting, about organizations. And so now we're going to talk about financial statements. So the first thing that you should know is that all publicly traded companies are required under the Securities and Exchange Acts of 1933 and 1934 to publish financial statements. They're required to publish them every quarter, which is in 3-month intervals, and in comprehensive annual financial statement. And the quarterly statements are called 10Qs. And so they focus on what happened financially over the past 3 months for that particular organization. And the annual statements are called 10Ks, and they give us a comprehensive snapshot of what happened financially over the last 12 months for the organization. So publicly traded companies are those companies which the SEC authorizes to issue stock to the general public. So if a company is allowed to sell stock to the general public, they're considered a publicly traded company. And their financial statements then have to be disclosed to the general public by being filed with the Securities and Exchange Commission on these regular intervals, either quarterly or annually. When management issues their financial statements, which, by the way, are also reviewed to ensure that management has complied with generally accepted accounting principles, management also generally releases a press release and often also has what's called an earnings call. We'll talk about these things a little bit later in the semester. Private organizations, and those are those that do not sell stock to the general public, are not required to share their information publicly. So they're not required to file their financial statements. Most of the large corporations in the United States are publicly traded. There are exceptions, but one notable one is that Dell, which was a public company, went private. And they went private by buying back the shares of their stock. The other thing that you may find interesting, and we will look at later in the semester, is that most nonprofit organizations have to disclose their financial information. And the forms that they are required to file, which are available in the public domain, are called 990s. They file them with the Internal Revenue Service, and because they get certain public advantages, those become available to the public, and we'll find out. We'll learn how to find those later. There's an organization called GuideStar, which actually collects all the information, and you can register an account there for free and get information about just about any nonprofit you want, including MCPHS University. So in the annual report, or the 10Ks as they're called on the Securities and Exchange Commission, we're going to find the major financial statements, which are the balance sheet, income statement, statement of cash flow, and there's a fourth one, which we're really not going to focus on this semester, which is called a statement of shareholders' equity. In addition, we're going to find some other things that go above and beyond the financial reports. The management discussion analysis is also part of the annual 10K, and it gives management's perspective on the financial results. So above and beyond the numbers, management's going to have to tell us about their sales, their pricing, their competition, their costs, and other things that an investor or creditor or the key stakeholder would benefit by knowing. So we're going to focus in on 3 main financial reports this semester. We're not going to worry about the shareholders' equity. Rather, we're going to focus in on these three primary financial statements: the balance sheet, the income statement, and the statement of cash flow. Sorry about that. So let's take a look at each of these. And we're just going to take a high-level look tonight, or today, or this week rather, because what we're going to do throughout the balance of the next several weeks is to examine each of these three financial statements in much more detail. So this week, we're just getting a high-level overview of what's on them. We're not going to worry about the nuances and details. We'll do that later. So the balance sheet is also called the Statement of Financial Position, and it has three major components. It has assets, liabilities, and owner's equity. The balance sheet is also contains what is often called the accounting equation, because the reason it's called a balance sheet is that assets always equal liability plus owner's equity. So it's always in balance. And so when we look at a balance sheet, you're going to see at the top, you're going to see three things. You're going to see the name of the entity, the company it's being prepared for, the name of the financial statement, which is the balance sheet or statement of financial position, and the date that it's prepared for. So it's a point in time. So balance sheets reflect a specific date and time, usually at the end of a quarter or the end of a month or the end of a year. So this one is September 30th, 2004. So this is probably a quarterly financial statement at the end of the third quarter for Global Grocers. So you'll see typically on the left-hand side the assets, and you'll see the total assets equal $223,350. And then on the right-hand side, you'll see liabilities, owner's equity. You'll see the total for those combined equals the total assets. Sometimes assets are on the top and liabilities, owner's equity on the bottom, and that's just a semantical method to report things. But balance sheet are the things that we own, assets are things we own, and liabilities are things that we owe to others. And the difference between those two things is our equity. Income statement is actually quite simple because there's not a lot to it. In our course, we're only going to focus through operating income. We're not going to worry about the things that go on below operating income. And the reason for that is that if you were to take more advanced accounting classes, a lot of the time is spent on understanding the nuances that go on below operating income. And an introductory financial accounting course, it's beyond the scope of what we need to know or want to know at this point. So just as an FYI. So again, with all financial statements, they always have three things at the top: the name of the organization. The second line is always what financial statement am I looking at? And then the third is the time period. So remember I mentioned that the balance sheets were a point in time. The income statements are for a time period. So where the balance sheets tells me how much I had for assets and liabilities on a particular date, the income statement tells me how much did I do in sales, how much did I do in expenses, and how much profit or loss did I have for a particular time frame. Could be a month, as it is in this particular case, could be a quarter or 3 months, could be for a year. Okay, but it covers a time frame as opposed to a point in time. Okay, and on the income statement, we're going to see sales. This is also called the top line. Sometimes we see this called revenue. Those terms are used interchangeably. If the entity makes or resells products, they can have a cost of goods sold line. So manufacturing companies and merchandising companies have a cost of goods sold line because they sell inventory. Service companies do not have this line. And then we have operating expenses. And usually we'll list out the operating expenses. And when I subtract the operating expenses from either my gross margin or from my sales, I'm going to have operating income. And we're not going to worry about the rest of this at this point in time. So the third statement that we will examine in greater detail is something called the statement of cash flow. So the statement of cash flow basically focuses in on where did I get my cash and where did I use my cash. So where the balance sheet tells me what do I own and what do I owe, and the income statement tells me what were my sales and how much money did I make or lose, the statement of cash flow tells me where did I get my cash and where did I use my cash. And one thing that many people would assume is that my cash flow and my profit are the same, but that's hardly the case because there's many other things that impact cash flow than profit. Certainly our profit or loss is a factor, But there are other things like, well, let's say I buy equipment, or let's say that I raise cash by selling stock or taking out a loan. Those also impact my cash flow. So cash flow, there's more to it than just simply profit or loss. And when we get to this statement, we'll examine what may impact cash flow. And suffice to say that there have been many, many profitable companies that have run out of cash. And so it's very important that we understand the statement of cash flow and understand what influences it, so that we don't run into a problem of having a very successful and promising company have to either sell out because they don't have the cash, or go to a bank or investors and get very unfavorable terms. So, okay, so as I mentioned, the balance sheet describes where the enterprise stands at a specific date. The income statement depicts the revenue and expenses for a time period or period of time. And increase in revenue generally results in positive cash flow, and expenses generally drain cash flow. But there are other things that impact cash as well. And the statement of cash flow depicts the way cash has been changed during the period, where I've obtained my cash, my sources of cash, and where I've used my cash. So here are the three main financial statements: balance sheet, income statement, statement of cash flow. This will be the focus of things over the next several weeks. Go through and examining these. I'm going to have you pick out a publicly traded company, have you examine it with your teams and talk about it, and hopefully you'll, at the end of the next several weeks, you'll start to have a comfort level with where to find financial statements and how to read